And thank you very much for joining me here today. I'm Don Ma. Many in China are determined to get married soon, but it seems like some can't afford to, as the economy is grappling with uncertain economic outlooks. Here's the story.
Would you attend a masked party to find the one? That's the idea behind this matchmaking event organized at an upmarket jazz bar in Shanghai for wealthier, top university-educated singles. Entrepreneur Victor Li is one of the participants. He is determined to get married, but like many other young Chinese grappling with uncertain economic outlook, he isn't sure he can afford to.
It's very expensive for us to get married, especially in a big city like Shanghai. For example, if we get married, we need a place to settle down, and having a house is definitely an essential. In terms of financial ability, it actually puts a lot of pressure on young people, including myself.
The reluctance to tie the knot is worrying policymakers. China is grappling with a decline in birth and a rapidly aging population. The country's fertility rate is currently one of the world's lowest. Local governments have announced various measures to encourage people to form new families, including tax deductions and housing subsidies, as well as cash rewards for marriages if the bride is aged 25 or younger. Still, many wealthier Chinese are choosing to stay single due to poor job aspects. Youth unemployment is high and consumer confidence is chronically low. That all led to a record slump in marriage registrations in 2022. Julian Meng owns the company that organized the masked matchmaking event in Shanghai.
From what I've observed, people over the age of 35 seem to just give up. They give up the idea of getting a partner. They may feel singlehood could be pretty good too and find a balance. But the group of people who don't want to be single are usually between the ages of 30 and 35.
And accusations of Chinese AI Baidu chatbot being tested for Chinese military purposes sent the company's stock tumbling, possibly a sign of future problems for companies working with Chinese military testing. NTD Sean Marshall has more.
Chinese technology company Baidu's stock had a significant decline on Monday after a report claimed links to a Chinese military lab. The report stated that the People's Liberation Army Strategic Support Force had tested AI system Baidu's Ernie and also iFlyTrek's Spark. Those are two large language model chatbots similar to OpenAI's ChatGPT. Lab researchers said their goal was to make military AI more human-like, better understanding the intentions of commanders at all levels, and more adept at communicating with humans. Baidu's Hong Kong shares dropped 12% after the South China Morning Post report, and Baidu's U.S. shares dropped 7% Monday. Baidu claimed no business collaboration connected to the military lab chatbot tests, which the China Morning Post corrected. An example of the type of test done simulated a U.S. military invasion of Libya in 2011. The military AI provided information about the weapons and deployment of both armies to the large language models. After several rounds of dialogue, the model successfully predicted the next move of the U.S. military. Baidu also stated that if their Ernie bot was used, it would have been the version publicly available online. Sean Marshall, NTD News.
It seems like yet another industry is moving out of China. The toy manufacturing industry, that is. India gradually is becoming more of a manufacturing hotspot. NTD's Sean Marshall has more.
Rising costs in China are forcing toy manufacturers to seek cheaper options in other countries. 6 years ago, monopoly maker Hasbro approached Indian durable goods and aerospace supplier Aecus to subcontract. They said if you can get into toy manufacturing, now we're looking to shift millions of dollars worth of product from China to India, Rohit Hedge, Aecus head of consumer verticals, told Reuters. Fast forward to today, and Aecus makes dozens of types of toys for Hasbro and others, including Spin Master, in two 350,000 square foot facilities in India. Hedge said the only problem is getting to the level of efficiency that China has come to run on. India still lacks the port facilities and road facilities that China's 30 years of experience has taught them. Still, for toy manufacturers including Hasbro and Barbie doll maker Mattel, the risks of relying on China for most of their production were highlighted during the COVID-19 pandemic. Chinese ports struggled to export goods and were periodically shut down, leaving shipments stranded. Hasbro began addressing its oversized dependence on China as an operational risk in its annual report in 2018, while Mattel has reportedly been shifting away from China since 2007, when it had to recall millions of toys tainted with lead paint. Efforts across the industry have ramped up since the pandemic. India accounted for only 1% of US and EU toy imports over the past 5 years, according to Panjiva's data. The issue is India is really the gridlock of moving even from one state to another. There are so many crazy regulations, MGA Entertainment CEO Isaac Alarian told Reuters. The infrastructure is getting better and better as these countries realize the opportunity they have to take business away from China, and they are investing, he said. And the cost of container shipping from China to the Mediterranean jumping 44% due to Houthi attacks is not helping much either. Sean Marshall, NTD News.
And U.S. stocks closed lower, with Apple dropping 1.2% after offering rare discounts on its iPhones in China. And this is just days after being overtaken by Microsoft as the world's most valuable firm. Here's a quick recap of markets.
U.S. stocks ended lower on Tuesday after mixed earnings from Morgan Stanley and Goldman Sachs pressured banks, and as sell-offs in Boeing and Apple weighed on the S&P 500. The Dow dropped 0.6%, the S&P lost almost 0.4%, and the Nasdaq shed 0.2%. Shares of Morgan Stanley tumbled more than 4% to a more than 1-month low after it posted a lower quarterly profit, while shares of Goldman Sachs ticked higher after it reported a 51% rise in profit. Apple dropped more than 1% after offering rare discounts on its phones in China in response to stiff competition there. The move comes days after being overtaken by Microsoft as the world's most valuable firm. Eric Ditton, president and managing director of the Wealth Alliance, thinks shares of the tech giant, along with others in the so-called Magnificent Seven, will not sustain the outsized gains they made last year.
Apple's had 4 consecutive quarters of declining revenue, just cut prices 5% on the iPhone in China. So there's questions, and they're still trading in high PE levels. High 20s, and they're not growing nearly as fast. Great company, but what's it worth?
In other company news, Spirit Airlines slumped 47% after a federal judge blocked JetBlue's planned $3.8 billion acquisition of the ultra-low-cost carrier, agreeing with the U.S. Department of Justice the deal would hurt consumers. Boeing slumped almost 8% to a 2-month low after the Federal Aviation Administration extended the grounding of its 737 MAX 9 airplanes indefinitely, and Wells Fargo downgraded the stock to equal weight from overweight. And Advanced Micro Devices jumped more than 8% after Barclays analysts raised their price targets for AMD and several other chip makers, saying they would benefit from growth in artificial intelligence. Larger rival NVIDIA climbed about 3% and hit a record high.
And Spirit Airlines is facing tough choices. A judge blocked its $3.8 billion merger deal with JetBlue Airways yesterday. The low-cost carrier is struggling to return to profitability amid rising operating costs and supply chain problems. An airline analyst at TD Cowen says Spirit will likely look for another buyer, but that a more likely scenario is a Chapter 11 bankruptcy filing, followed by liquidation. The airline has also been hit hard by a snag with its geared turbofan engines. As a result, they grounded a number of planes last year, and that number is only expected to rise this year. Spirit's shares plunged 47% yesterday after the court's ruling, while JetBlue's shares gained about 5%. Goldman Sachs' fourth quarter profits beat estimates as equity traders capitalized on revenue from asset and wealth management. The company announced that profits increased to over $2 billion, or over $5 a share for the quarter. The bulk of Goldman's gains came from growing its asset and wealth management division. Revenue there rose 23% to about $4.4 billion. The gains were offset by weaker investment banking and trading, which fell 12%. Goldman also recognized $529 million expense in the fourth quarter to help refill a government insurance fund that was drained when two banks collapsed last year. Attacks by Iran-backed militants in the Red Sea have effectively closed one of the globe's main trade routes to container ships. Now, oil tankers are starting to avoid the southern Red Sea, and gas prices could begin to rise. Here's more.
The sound of UK fighter jets lifting off, part of a US-led effort to go after Houthi militants based in Yemen. Backed by Iran, these militants, who say they're taking revenge for Israel's war on Hamas and Gaza, have been attacking container ships in the Red Sea since November. It's one of the world's most important trade routes. The violence has forced commercial shipping companies to avoid the area. And now, oil companies are following suit.
What you're seeing is a number of those oil tankers are no longer traversing the Red Sea.
Oil prices are already starting to tick higher. On Friday morning, U.S. crude climbed as much as 4.5% to $75.25 a barrel.
We see that the shipping is more restricted in the Red Sea. The price of oil is going up.
Gas prices remain relatively low for now. According to AAA, the national price of gas was $3.07 on Monday. But low prices may not be around for long.
We use about 100 million barrels of oil every single day, and that will certainly have an effect on price.
Summer says roughly 18 million barrels of oil travel every day through what's known as the Strait of Hormuz. But the situation in the Red Sea is so tenuous that oil tankers and commercial ships are taking a totally different route, all the way around the Cape of Good Hope in South Africa. That adds days to the journey. Energy prices could spike, and so could the price at the pump.
And we're now seeing the first clear sign that attacks in the Red Sea have hit manufacturers as shipping companies weigh the risk and cost of taking the Suez Canal. Some production has been suspended in Europe by automakers Tesla, Volvo, and Suzuki due to a shortage of components. Some companies have rerouted vessels via the much longer South Africa route, adding about $1 million in fuel and about 10 days to the trip, which could create product shortages and potential delays. Analysis shows that consumer goods, clothing, and chemicals were among the sectors most at risk. And adding to the cost is increased insurance. That's equivalent to hundreds of thousands of dollars added for a 7-day trip. And Toyota Motor plans to produce about 10.3 million vehicles globally in 2024, and this is a figure which could renew its record annual production for the second consecutive year. The Nikkei reported. Here's more.
Toyota plans to produce about 10.3 million vehicles globally this year. That was the report from the Nikkei on Monday. If the Japanese auto giant hits its target, it would mark a second year in a row of record annual production. Toyota is preparing to increase production thanks to strong sales of hybrid vehicles, according to the report. The Nikkei further added a shortage of automotive semiconductors and other components is also easing. The report said the world's biggest automaker by sales aims to produce 3.4 million vehicles in Japan and 6.9 million overseas. The figures include its luxury Lexus brand. A Toyota spokesperson said the report was not something the company had announced without commenting further. Last month, Toyota said it produced 9.2 million vehicles during the first 11 months of 2023. Around a third of the vehicles it sold worldwide over the period were gasoline-electric hybrids.
Apple has found a way to bypass an import ban on its Apple Watches over patent infringement on its pulse oximeter function. U.S. Customs and Border Protection has determined that Apple can use a redesign on Series 9 and Ultra 2 watches. This comes after health tech company Masimo successfully sued the tech giant for patent infringement. In filings, Masimo said that Apple told the U.S. Customs that the redesigned watches definitely do not contain pulse oximetry functionality. Apple actually won an appeal to pause the ban as it continues to fight the ruling, but the Federal Circuit is still considering whether to reinstate the ban. British energy major Shell has said it will sell its problematic onshore operations in Nigeria to a consortium of mostly local companies as it exits part of its business that has operated since the 1930s. Take a look.
Shell has agreed to sell its onshore oil and gas business in Nigeria for up to $2.4 billion after nearly a century of operations. The British energy major said on Tuesday that it would sell the Shell Petroleum Development Corporation of Nigeria Limited to Renaissance, a consortium of 5 mostly local companies. The deal is made up of an initial consideration of $1.3 billion, with the buyers making an additional payment of up to $1.1 billion at completion. Shell has been active in the West African country since the 1930s, but it has for years struggled with hundreds of oil spills at its onshore operations as a result of theft, sabotage, and operational issues. That's led to costly repairs and high-profile lawsuits. Shell said Renaissance will take over responsibility for dealing with spills, theft, and sabotage. However, Nemo Bassi, executive director of Nigerian advocacy group Health of Mother Earth Foundation, said that Shell must own up to its responsibility. That, he said, means full payment for the remediation and restoration of the polluted areas, as well as reparations to the host communities, adding they cannot walk away from the virtually irreparable harm they have caused. SPDC Limited operates and has a 30% stake in the SPDC joint venture that holds 18 onshore and shallow mining leases. Shell's resources in SPDC reached around 458 million barrels of oil equivalent by the end of 2022. The sale to Renaissance requires the approval of the Nigerian government. Shell will also remain active in Nigeria's more lucrative and less problematic offshore sector. The exit is part of a broader retreat by Western energy companies from Nigeria as they focus on newer, more profitable operations. ExxonMobil, Italy's Eni, and Norway's Equinor have struck deals to sell assets in the country in recent years.
ChatGPT maker OpenAI is focusing on a new democratic process to tackle bias in AI as it launches a new team to focus on managing artificial intelligence software. The Microsoft-backed company announced in a blog post that the Collective Alignment team will create democratic processes to shape how its AI software should be governed to address bias and other factors. OpenAI says the new team will work closely with the human data team to build infrastructure to collect input from people on the company's AI model. Swiss chocolate maker Lindt reported a 10.3% rise in 2023 organic sales on Tuesday. And this is as the post-health crisis recovery in travel generated demand for higher value products, such as their chocolates. Take a look.
Consumers had a taste for the chocolate made by Lindt and Sprüngli last year. The Swiss firm reported Tuesday a 10.3% rise in organic sales for 2023. A post-health crisis recovery in travel helped build demand for higher value products. The maker of Lindor balls credited most of the growth to higher prices used to offset elevated raw material costs, especially for cocoa. Overall sales reached $6.06 billion last year, up 4.6% and slightly above analyst forecasts. Lindt said its most important product line, Lindor pralines, saw double-digit percentage growth in all regions last year. It further said customer presence in its stores and travel retail business also rose. For this year, the chocolatier targets organic sales growth of up to 8%. Its full annual results are due to be published on March 5th. Investors liked what they heard Tuesday, and shares in Lindt rose 5%.
And Costco is cracking down on membership sharing. The company is testing a new system requiring shoppers to scan their membership cards when they enter the store. This replaces shoppers showing their cards to employees when they walk in. Costco also started asking for membership cards and photo IDs at self-checkout stations. The membership model is critical to the company's business, offsetting expenses to keep prices low. In a statement, the company said it's unfair for non-members to receive the same benefits as paid members. The U.S. Supreme Court has rejected dueling appeals from Apple and Epic Games in their antitrust battle. Epic sued Apple, accusing it of acting as an illegal monopolist by requiring users to buy apps and digital content through its App Store, which collects 30% commission. A judge rejected the antitrust claim but found Apple violated California's unfair competition law, which means Apple now has to let app developers include links that direct users to other payment options for digital content in their apps. And thank you very much for watching NTD Business Today. That's all the stories we have. See you soon.